Thank you very much for inviting me, Tav. Really, I'm very happy to be here to be part of this program. Somebody asked me, what are you doing in Alaska? The last frontier of the United States. I went to Alaska to go to graduate school. After I completed my MBA program, I joined the Wells Fargo Bank as branch manager and VP. Well, if you're feeling a little bit cold, I'm sorry, I brought some cold weather with me. Do apologize. But Kalamon Sonko wrote an article of me that I'm very, very proud of as a Gambian. We built, I have to mention this, because I'm Gambian, I'm very proud of this. I'm the president of Islamic Community Center in Alaska. We built a $4.2 million masjid in Alaska, one of the biggest in that northern hemisphere. It's the only masjid in Alaska. That part I'm very proud of, really. Okay. So, my topic today is making housing finance work. As a branch manager, if we can, in America, if we can make it work, we can make it work here in the Gambia as well. Can you slide, please? Can you hit the slide? Making housing finance work, without a doubt, the home buying process can be very intimidating. You have to be dedicated to your clients. When clients walk into my branch, I treat them with respect. Not only with respect, but I ensure that they have their best interest at heart, whether they are first-time home buyers or they are 5 times home buyers. My first goal is to make sure their experience is as pleasant and as smooth as possible. With my 17 years in banking, I'm always passionate about the loan process and helping my clients to achieve their dreams of home ownership. It is not just your home. It is not just your house, but that's your home. Your home is where you feel comfortable. That's where I have my comfort zone. It should be dedicated. Next slide. Next slide. You should have, first thing before you call to, you visit your banker or your lending institution, one thing you have to do very well as a consumer, you do your homework. And the way that you do your homework in America, and you can work here as well. First thing you do, gather all your relevant personal information before you make an appointment with a lender. Personal information, this includes financial statement, pay stub, and the very important thing is your credit history. Credit history is very, very important. Young people up here, don't mess up your credit. Not only in the Gambia, but if you go anywhere, your credit follows you. That's just your track record. Honesty and integrity is very important, especially in this modern society. Okay? If you want a good loan, you want to buy now, you want to live in a comfortable house, you want lenders to trust you, to give you loan, you have to be trustworthy. And the way that you can be trustworthy, you have a good track record. Track record means like good credit history. Next slide, please. And one thing I always tell my bankers, before you even when customer comes in to apply for a loan, one thing you should apply, what bankers do, lenders do, 5 C's of credit. If we have any bankers here or lenders here, please remember this, 5 C's of credit. And the young people that are in the audience also, if you are interested in going to lending institutions, 5 C's of credit. If you ask the customer, is your character, borrower's reputation or track record for repaying debts. Number 2, capacity measures a borrower's ability to repay a loan by comparing income against recurring debts and assessing the borrower's debt-to-income ratio. In addition to examining income, lenders look at the length of time an applicant has been at his job. Number 2, that is, what is important also is your stability, this job stability. You have to be someone that can stay in the job, but you cannot be jumping from one job to another job. That way your financial thing is not very secured. Look very suspicious. Okay. The third one is capital. How much money do you have to invest? And the more money you invest into the loan process, the large contribution by the borrower decreases the chances of their default. Number 4 is collateral. Collateral can be a borrower's secure loan. It gives the lenders the assurance that if the borrower defaults on the loan, the lender can repossess the collateral. In this case, if you buy a house, you default on it, they will repossess the house. The bank will not be at a big loss anyway. And the last one is condition. The condition of the loan, such as its interest rate and the amount of principal influence the lenders desire to finance the borrower. Conditions refer to how a borrower intends to use the money. It could be maybe their family size increased, or their income increases. They have to state the reason why they're looking for that particular housing or they're looking for that loan. Next slide, please. Then after that process, we go through the pre-qualification for a mortgage loan. Lenders will require information about your income and debt to assist you with the completion of a mortgage application. They will also discuss loan programs and the types of financing to help you select the loan that best suit your needs. The lenders will also estimate the maximum mortgage amount and provide important disclosure required by law. Shop for the best deal and negotiate for terms. Very important. Always negotiate for terms. Next slide, please. Loan processing begins after you sign a purchase agreement. I don't know much about, but I think this is true in Gambia as well. Sales contract with the seller. The lender will review your application, review your credit history, ability to make a payment on the requested loan, a loan amount to credit qualify you for the loan. They will order an inspection of the property. In this case, inspection to the property to determine that the home is in compliance with health and safety issues. I think in the case of the Gambia, they will go to physical planning, I believe, to make sure they are in compliance. Okay. The lenders will then order an appraisal of the property to determine the market value of the home. Homeowners insurance is ordered from an insurance company of the borrower's choice. Next slide, please. A title policy is ordered from a title insurance company that will handle the loan closing and recording of the title for the property. The lender's loan underwriters will review the loan information and provide a final loan approval. The lender will then schedule a loan closing at the title company where final documents are signed, and the following business day, the documents are recorded in the public record, transferring ownership from the seller to the buyer. Next slide. Very important. Every first Saturday of the month, at Wells Fargo, they will always conduct free classes offered to prospective home buyers. Awareness is very important. It's the key to this business. Awareness. Consumers need to be informed all the time. Classes will be open to all buyers, regardless if it is your first time or your fifth time as a buyer. The class will be taught by licensed real estate and loan professionals. Teachers will teach clients how to shop for lenders. Real estate professionals will give you the best advice. Lenders will teach prospective home buyers how to get a loan. Real estate agents will teach home buyers how to conduct a home inspection. Lenders will teach home buyers money management and budgeting. Real estate agents will also teach home buyers about title insurance and energy efficiency homes. Next slide. Affordable housing. The price of housing in a community needs to be affordable for the middle class. To be able to purchase, as they are the workforce driving the economy. Middle class In the United States, they are one of the biggest drivers of the GDP. And it's true, it's also true in Gambia. A housing market, if it is affordable, definitely should be one of the driving force of our GDP. Lenders will determine borrowers' ability to make a home payment based upon debt-to-income ratio. Okay, there is a program in the United States. There is two types of loans there, conventional and non-conventional loan. The conventional loan is just your normal loan. And then the other one is it's called the VA one. This government guaranteed loan. They guaranteed the loan 50% of the loan. That is, if you are a veteran, a war veteran, or you are, they will guarantee your loan at 50%. And non-conventional, conventional loan, that would just be your normal loan. And you cannot approve a loan that's debt-to-income ratio is only 45% is the maximum. The most important payment for a home buyer is going to be their mortgage. Home ownership also comes with other financial responsibilities like housing maintenance and repairs. Next slide. There's two types of rates in the US. One is your fixed, it's also true here, it's the fixed rate loans, generally 15, 20 to 30 years, with the interest rate staying the same for the life of the loan. Consider a fixed rate mortgage if you want a predictable payment. Adjustable rates loans have interest rates that change during the life of the loan, so your payment can be changed. With adjustable rate loans, the initial interest rate is commonly lower at the start of the loan, but can increase over the course of the loan, which may increase your monthly loan payment. Buyers should make sure that whatever type of loan a buyer chooses, your monthly payment should be in affordable range for you so that you can pay on time without any issues. Thank you very much. This is it. I appreciate being here, and thank you for